Welcome to the Prosperity Gap, where we discuss the financial gap that exists between where we are and where we should be. It's time to bridge that gap.
Hey, Prosperity Nation. Welcome back to the Prosperity Gap. My name's Dave Hall. Hopefully you've had an amazing week. I actually just got back from Las Vegas, spent the weekend there at a convention, really enjoyed my time, took an opportunity to learn a lot, get myself motivated so I can push myself going forward. Very excited about today's show. Today I have with me not only one of my good friends, but we've got Ben Smith from Etrends, a company that we all work with. Ben, how are you?
I'm well. I'm Dave. Thanks for having me.
Very excited to have you back. I think you've been on vacation, haven't you?
Yeah, I've been traveling the world. So but it's good to be back.
I bet. You've got 8 kids, correct?
I do. I have 8 kids and a minibus.
Yeah, I've got 6, so we both know what it's like to go on vacation with a big family, and sometimes it's nice to get back. We sure appreciate our wives and all the hard work that they put in on a daily basis.
Absolutely.
Today's show, we want to talk about taxes. You're the tax manager here at Etrends. Well, maybe we can get started a little bit by just talking about what happened in 2017.
Yeah, so 2017, we had the TCJA, which was originally was the brainchild of the Republicans and was originally intended to be tax simplification. That's how it was billed, and it didn't really achieve much simplification. In fact, I think nearly the only piece of simplification that it did achieve that the IRS is rolling back this year, but they're getting rid of the postcard size tax return. It never got quite that small anyway, so probably not horrible. Anyway, tax simplification and of course a tax cut, and it did achieve the tax cut. Most of us got a tax cut, but that's what it was. So we have it now. We have it for a few more years, and for the most part, it's good.
And how long is it supposed to last? Is this something that's supposed to go on for some period of time? I know a lot of these tax laws change with administration sometimes. Sometimes they just change by an expiration period.
Yeah, so most of this tax law essentially expires in 2025. There's lots of exceptions to that. There's some pieces that expire before 2025. There are some things that are permanent, some things that were passed that were permanent. But 2025 is a general rule is when it expires. If it doesn't get changed by Congress before that, which is always possible. In fact, it's likely, right? Congress passes new tax law each year, so some things will change before that, certainly.
Ben, one of the things you talked about in the beginning is that it was supposed to simplify and it was supposed to reduce. Let's talk a little bit about the reduction side. I know for myself, there were a number of media articles, a number of media interviews where people were paying more money. It was a big thing. You know, they're claiming that there was going to be all these tax savings, and the media was coming out and saying that's not true. People are paying way more than they were before. Can you talk a little bit about the validity of these stories, what the true situation is?
Well, I suppose it's a little bit all over the board. So that's the thing about the media, right? If you want to tell a narrative, you could probably find a way to tell that narrative if you're looking at individuals. But you know, in short, in general, the tax law reduced taxes for most people. There are some people out there for whom it didn't do much. And there are some that are paying a good bit more. You know, the tax law, what it did is it cut rates across the board, so everyone pays a lower rate. And then it changed the way we calculate what is taxable income. And by changing the way we calculate taxable income, it changed the winners and losers. It shuffled the deck, made some people winners and some people losers in the way we calculate taxable income. And so that's where you get a lot of the stories. You get a lot of people say, oh, well, this increased my taxable income. And for many people it did. But after you apply the across the board lower tax rates, there's a much smaller portion of those people who are actually paying more tax. Now, you can, these are numbers, right? So you can twist them and do all kinds of stuff. For instance, you could say, well, my taxable income is higher, and if I applied the old tax rates or whatever, then I'm paying more tax or whatever. But that's not true. I mean, not for most people.
Was there some confusion too regarding the way that they did the withholding? Did that create a situation where people believed they were paying more than they maybe were?
Yeah. So the IRS couldn't get, in the first year, which was 2018, last year. The IRS didn't get their withholding tables worked out very well. So not enough was being withheld at the source out of wages, which left some owing at the end of the year. And again, that's a psychological game, right? People feel like they're paying more tax because they ended up writing a check at the end of the year that maybe they're not used to writing, or maybe instead of getting, maybe they're used to getting $3,000 or $4,000 back and they only got $1,000 back or something. And so there is a psychological game there, and a lot of people feel like they paid more or they didn't get as much back. But if most of those people, if you actually look at the actual tax paid through withholding and whatever else, most of them came out not any worse, most of them better.
And I think that's one of the things listeners need to really understand is that tax varies for every individual. You can't compare what your friends are saying, what your family's saying, and take that as gospel. I know it's happened to me many times throughout my career. Someone's come in and said, oh, my friend's got $10,000 back. Why am I only getting $2,000? Well, their friend had 4 children. Maybe they've withheld, at the maximum rate, and you're not withholding anything. I think what Ben's saying here is you really need to realize that it varies based upon your situation and your facts and circumstances and what's going on truly in your own life.
Right. Yeah, absolutely. It does.
Ben, is there a group of people that were losers? I mean, obviously they took away some deductions. Who were some of the people that got hurt the most?
Yeah. So the group that got hurt the most are kind of a narrow group of people. They're higher income people making wages, living in high income states, often with few dependents. So you can imagine the banker making a couple $100,000 or $250,000 a year or something in wages, living in California. He probably got hurt. And for a few reasons. Number one of the biggest, again, the deck was shuffled, right? And in that shuffling, the people who, and you might ask me, but the people who came out really well are business owners, right? So they got more deductions. He's not a business owner. He makes all of his money in wages. He probably pays a whole lot in state tax. All of those, a lot of that deduction got nixed, as I'm sure most of your listeners have heard. So he lost a lot of deductions. And of course he's not getting. Maybe he doesn't have children, so he's not getting the increased child tax credit. So he may have got hurt, or that taxpayer may have been hurt. Yeah.
What about the individual who was having a bundle of unreimbursed business expenses? I know it's something I've seen a lot of in the past. You have guys trying to write off everything, saying that their employer's not reimbursing for it. What effect did it have on those people?
Yeah, there are a few of those people, and again, they also got hurt. So that's in the itemized deductions. It kind of got thrown in with state taxes. So same thing. I mean, if you're writing off $40,000 every year of unreimbursed employee business expenses, number one, you should get a new job. And but you lost all of those. And so if you didn't work that out with your employer, you probably still could. maybe go to them and say, hey, you're making me do a lot of travel that I don't get reimbursed for. You're making me pick up all of these expenses I haven't been reimbursed for. In the past, I got it deducted. It wasn't as bad, but you need to pitch in here. So that's what I'd recommend. But yeah, you probably are hurt for tax purposes if you're in that.
So you mentioned one of the winners was the business owner. There were some benefits given to them. Any other real winners as far as individuals that got benefits from this?
Yeah, sure. Yeah. I mean, a lot of average families, right? A lot of families that have never itemized were winners, right? They ended up getting, maybe doubling their standard deduction, or maybe people who were just barely itemizing before, maybe they had a mortgage or some other things. Maybe they were, itemizing to the tune of 13 grand or 14 grand, just barely over the previous standard deduction. Well, again, they got a big bump in the standard deduction, so up to 24,000 now. So that was a big winner. Now in exchange, they lost their personal exemptions, but if they had a bunch of kids, and they're making moderate income, they probably came out way ahead. They got $2,000 per kid. I have 8 kids, so I fit there. I got a bunch of child tax credit.
I just got to let people know that having children is not the way to save money. It's not worth the tax benefits versus all the other costs. Now, I'm super happy to have the 6 children that I have, but it's not because I'm getting tax benefits.
No, the tax benefits aren't going to pay for your children, but in any case, yeah. If you have a bunch, you're moderately, you have a moderate amount of income, and again, maybe you didn't itemize before, maybe you're a renter. You probably came out pretty well in this, and of course, business owners, that they're really the biggest winners. So if that bill, if you have a moderate amount of income and you've got a family and you didn't itemize before and you're a business owner, well, it was probably a tax coup for you. You came out really well.
Well, let's talk a little bit about that. One of the things that I often pitch to people is that a business owner is one of the great last tax deductions that there really is out there, because it gives you an opportunity to be able to deduct so much. Do you feel from your side that for many people, owning a business, even if it's just a side business, could be a good thing for them?
Absolutely. And the IRS recognizes that too, So there was a lot of discussion at the IRS after this tax law, and where the IRS realized, wait a second, we're giving so much away to business owners now. And when I say giving away, that's not even right. We're just taxing them less. We're taking less from business owners now. That the IRS realized that there was going to be a big incentive after the new tax law for employees to say, I don't know if I'm an employee, maybe I'm a business owner now. And people would want to recharacterize what they're doing from employment to business. And that is certainly an advantage. If you can do that, or if you have the option to do that, or maybe you've just thought your whole life you wanted to be in business and you just never took pulled the trigger, well, there's a lot more incentive to do that. So.
And for those people that fall in that category, Ben, is there some guidelines that help govern? I mean, can anyone just go from employee to business owner, or are there some rules that they're going to have to follow to make sure they do it right?
Yeah, well, like most things with the IRS, there's rules. It's probably not wise, and it's probably a deeper conversation than maybe we want to have here, but probably not wise to just go out and reclassify yourself and then show up to tax time and say, well, now I'm a business owner. I'm doing the exact same thing I've always done. And please give me those deductions. You probably do, first of all, it's a wise thing to do. If you can be a business owner, great. But you probably want to talk to an advisor and put together a plan so that when you do that, you aren't challenged by the IRS. Like I said, that is a discussion the IRS has had. They've already contemplated this happening, and they're on the lookout for people who aren't really changing what they're doing, haven't really gone into business themselves. They've just tried to recharacterize their income as that. So it's a good plan, but make sure you do it well and right, and so that you don't get caught.
Ben, you're leading to it a little bit here as you talk about the need from going from an employee, if someone chooses to do that, to a business owner. You talk about planning, things that need to be done. Where does planning fall now with the changes? You mentioned in the beginning, part of the goal was to make things simpler.
Yeah.
Is planning still really necessary?
Yes. In fact, I would say it's more necessary than ever. That's the funny thing about taxes. Every time Congress starts talking about taxes and they start saying, well, we're going to make it easier for people, they never succeed. It's always more complicated in the end. And I suppose there's a lot of reasons for that. But so yes, planning is more necessary than ever. There are a lot of tax breaks. There are more tax incentives. There are, so the tax law is kind of ripe right now for harvesting, I guess you could say, if you're a taxpayer. But you're not going to do that very successfully without some significant planning. I mean, really, the only place the tax law got easier is in itemized deductions. And it's probably not even easier there because most people probably don't know whether it was made easier for them or not.
Right.
And so you still need to talk to somebody and figure out, if the simplification really benefits you or not. But other than that, other than itemized deductions, everything else needs more attention today. Make sure it's structured correctly. Make sure you're actually going to be able to take advantage of that 20% qualified business income deduction, or one of the other myriad of benefits out there.
Prosperity Nation, I hope you're hearing what Ben's saying here and you're understanding the importance of this, because I can't stress the importance of it enough either as you look at the situations you're in right now. Again, basically the IRS come in and said, hey, we're trying to make it simpler. The media has grabbed onto that. Many companies have grabbed onto that. And now as a result, there are a ton of options out there for you to go get your tax return just prepared. You can do it online. You can go to these various companies and they are going to prepare your tax return. But be aware, unless you have just a W-2 and there's no other deductions, no kids, no anything else involved, I think it's very wise that you're getting advice. I mean, whether it's a discussion of, am I in a situation that maybe being an employee isn't the right thing for me now? Maybe starting a side business. I have an interest in doing something on the side. What would it require for me to start a side business and be able to get some of these amazing deductions that are out there? Very important to go to a place where you can get the advice you need, because if not, taxes are one of our biggest costs. I mean, that's another thing people don't often realize. We look at our home mortgage, we look at our car payments. Well, they're things that we're paying every month. They're coming out of our checking account. Well, many times your taxes is just coming out of your check before you ever see it. So you forget how much that is and how much money can really be saved. Do you agree with that?
Yeah, absolutely. Our tax system's designed, at least for the average taxpayer, to be kind of stealth, right? The IRS wants to take it before you ever get a chance to realize it was yours in the first place. And so yeah, you need to plan, and there are some great opportunities. Like I said, today in our tax environment, it's possible for you to pay probably less tax than anyone's paid in the last few generations.
And I think it's one of the things, Ben, that we've got to be aware of is that it may be less tax than we'll ever pay in future generations.
It might be the very, very bottom.
Yeah, when you really look at what's going on out there and you realize the debt that we have, you realize Social Security issues and Medicare that's going on, the negative impact they have. If you look at all the other benefits that many people are trying to provide, they require money. And right. We're in a situation that in order for that to happen, either spending's got to be cut somewhere else, or we've got to increase taxes or go bankrupt. I mean, I really see it as three options.
Yeah. Yeah. And cutting spending in a democracy is hard. So higher taxes is the most probable outcome.
What do you see out there right now in regards to audits and the IRS? What are they doing? Are they auditing more? Are they auditing less? Specific things they're looking for?
Audits have been falling for years and years and years. So currently we are, again, same with taxes. We're at like an all-time low for audits at the moment. However, in the last, year and a half or so, there's been a little bit less acrimony when it comes to funding the IRS. And so the IRS is getting the last budget was a little bit more generous to the IRS. The biggest changes at the IRS right now are first and foremost IRS modernization. And, the IRS the Congress has given them a budget finally to do something. And it's something that taxpayers need to be aware of. Right now, and for the last many, many years, the IRS has been working on in numerous different systems, most of which are antiquated and were built in the 80s. And so their systems didn't talk very well. In fact, when you call the IRS right now, you're probably talking to an agent who has multiple computers on their desk, all running different functions for them. And those systems don't talk. So IRS modernization, of course, is a good thing. It's going to help. The IRS will be able to provide better service to us. And of course, we shouldn't wish inefficiency on our government necessarily, but it is going to mean they're going to be more efficient. Their computers will be better at spotting errors. In fact, a funny story, I called the IRS the other day. I amended a return for a client, and there were just a few minor changes on it, and I called to make sure they received the return, and they said, well, we did receive a duplicate return. And I said, well, okay, can you tell me what was on the return so I can see if it's the right return? And they said, well, they named off some number. And I said, well, what about this line? Oh, our system doesn't have that line. Well, what about this other line? Oh, our system doesn't have that line. And so what you learn from that is that there's a lot of lines on your tax returns that when it goes into the computer of the IRS doesn't even register. They're reported. And I suppose if someone gets the paper out, they could look, but they're not in the system. And if they were in the system and the computer were able to take that information and compare it and other things, then of course the IRS could be more effective at audits. And so that is coming. The IRS is going to be more effective at audits in the next few years.
Well, and I think it's important that they continue. None of us want to be audited, but hey, if there's people out there doing the wrong thing, being dishonest, taking advantage of the system, they need to be caught. They need to be given the consequences of their actions. And that's one of the things, listeners, as we kind of start coming to an end of this podcast, is that you understand that you need to do the right thing. But again, the right thing can be done easily if you get advice and if you work with a professional and they help you. You can make the right decisions, still get good tax deductions, still get great benefits from your taxes, but do the things that you need to do to make that happen. So as we close up, Ben, I know we've covered a lot of topics, covered a lot of things. Anything else that you'd like the listeners to know, maybe they should be aware of as we finish up?
Well, a few things. We didn't really talk about some of the expenses business owners can expense, especially if you're thinking about opening a business. You have to remember that when you open a business, one of the ways you benefit is you're able to convert some of the expenses you already have in your life to business expenses. So that's important. And if you're opening a business, come talk to us about it. Things like your phone or vehicle expenses, home office expenses, health insurance, maybe even some travel expenses. You got to convert those to business expenses and write some of them off. So there are some great benefits there, and come talk to us about it. Another one I would just put in anyone's ear is the qualified opportunity zones. It's a fantastic benefit. It's a niche benefit. But if you are able to take advantage of them, in other words, if you have appreciated property, you want to sell and put that property, reinvest in an opportunity zone, man, there are some great tax benefits there. Even some ways to essentially avoid almost all tax on your investments over the next 35 years. So big benefit there.
And it would be something we probably ought to do a show on. It'd be very helpful. I know it's a hot topic now. There's a lot of details. It's fairly simple, but people need to know the guidelines and the details on it. Yeah. Another thing that he brought up there that he talked about was home office. And as we close, I just want to let you know, things have changed there. There used to be a period of time when I first started that everyone saw home office as being a very risky deduction. You're going to get audited. there's so many people working from home now, that's no longer the case. All of these deductions that used to be high risk, our world's changed, business environments change, and those deductions are just standard place now when you look at the environment we're in.
Yeah. So yeah, come talk to me. Well, I'd love to parse some of that out for you individually, because like you said, Dave, it's very personal. Comes down to the taxpayer, but there's benefits to be had, and so I would love to talk about it.
Ben, thank you so much for being on our show. You've been listening to The Prosperity Gap, the show where we help you bridge your gap so you can achieve financial success.